I consider gold to be volatile but good liquidity. And that portion that you hold in gold, provided that you're willing to sell it and use it as liquidity when other things become priced more cheaply, is one form of liquidity that perhaps protects you from any impending weakness in the U.S. dollar. Note that I am not one of those who believes that the U.S. dollar will get precipitously worse than other currencies. I believe to the contrary, that despite all its faults,
liquidity refers to the ease and speed with which you can convert an asset into cash at its current market value. Gold is considered a highly liquid investment because it is relatively easy to buy and sell. You can invest in gold through various means such as ETFs, IRAs, and futures contracts. Rick Rule, CEO of Rule Investment Media, stated that this approach can help protect you from potential weaknesses in the U.S. dollar. The value of the U.S. dollar decreased slightly when compared to other currencies represented by a basket. This dip came after a significant drop, which was the largest decline in the dollar's value this year. The drop was influenced by falling Treasury yields, which are the returns on U.S. government bonds. Despite the decline, the dollar remained above its lowest level in over a year. However, there were no major events or news driving the direction of the currency markets at that time. Rule thinks that the value of the U.S. dollar measured in terms of gold will likely decrease over time. This means that the purchasing power of the dollar may decline when compared to the value of gold. But the price of the dollar refers to its value relative to other currencies, and it may stay strong against these currencies. Let's watch snippets from Rick Rule's interview, but before getting into the video, make sure to subscribe our channel and give this video a thumbs up.
I think if you're talking about the value of the U.S. dollar, you need to say compared to what? The U.S. dollar is the world's reserve currency, and I suspect it will continue to be, albeit less important, the world's reserve currency for the rest of my life. So when you talk about pricing the dollar, what are you pricing it in? I continue to believe that the price of the dollar, measured in gold terms, will begin to fall. But I think that the dollar measured in yen or yuan or euros or Great British pounds or Mexican pesos will continue to be strong. Americans' purchasing power stored in U.S. dollars, I suspect that is in inexorable decline, albeit slow decline. Dunnigan, you've heard me say before that despite the fact that my purchasing power held in short-term U.S. dollar-denominated instruments costs me purchasing power, I continue to maintain liquidity because I believe that the diminution of purchasing power on my liquidity is an option premium to have enough cash to get me through a liquidity decline, however and whenever that may occur. I think we're in an interesting position, if you will, caught between the devil and the deep blue sea. In terms of most U.S. investors and most U.S. consumers, given that they live a life denominated in the U.S. dollar, and given that many of their compatriots are overly indebted and run some risk in a liquidity squeeze, I think people who live U.S. dollar-denominated lives need to maintain some U.S. dollar liquidity. Please, in short-term instruments, not long-term instruments. And by short-term, I mean 12 months or quicker. Please, too, if you have excess liquidity, store some of it in gold.
In March 20th, 2022, President Joe Biden requested a report on the potential advantages and disadvantages of creating a digital dollar for the United States. In Washington, D.C., they call this digital dollar a CBDC, which stands for Central Bank Digital Currency. It would be a virtual version of physical cash, similar to cryptocurrencies like Bitcoin, but issued and regulated by the government. Shortly after Biden's request, the New York Federal Reserve conducted a 12-week program using simulated data to test a digital dollar. Rule highlighted that the government could cancel digital currency if they disapprove of someone's actions or behavior. This could give the government too much control over people's money and threaten their financial freedom. The BRICS nations have announced plans to create a new currency that will be backed by gold. This is a significant move, as it could offer an alternative to the U.S. dollar, which is currently the dominant currency used for international transactions. Rule highlighted that the BRICS currency is unlikely to replace the US dollar as a global currency, but it could be used as a trade mechanism between the BRICS nations. Let's watch Rick Rule's interview with Liberty and Finance.
I mean, obviously, the U.S. government would like a central bank digital currency that was called the dollar. They would obviously like the ability to issue currency with the stroke of a pen, which they do now through quantitative easing. But I think they particularly like the idea that they could cancel that currency. Apparently, the technology is now built in so that if they don't like the way that you talk or post or act, they can cancel your savings, an alternative that they don't have available to them with cash. I don't see that as a threat to the U.S. dollar. I see it as a threat to the U.S. citizenry, which they seem to care less about. As for the BRICS currency, I need to say that as a real currency, as a competitor to the U.S. dollar, in terms of facilitating things like buying a candy bar in Santiago, Chile, or even buying a car in Sydney, Australia, that the BRICS currency is no threat whatsoever. To the extent that the BRICS nations used an alternative currency really to replace the SWIFT banking system, where they had drawing rights to settle international trade, credit, and debits between themselves, and they had the ability to have a call on the gold that had been contributed to the counterparty. Now, that is a viable idea. Repeat, there is not enough gold in the BRICS countries to back a currency that was used to run their entire economy. There may well be enough gold in the system, however, in those countries to act as a store of value and an exchange mechanism for trade surpluses and trade debits between fairly small economies. So when people talk about the BRICS as a currency replacing the U.S. dollar, it's only really viable as a wholesale trade mechanism. It isn't viable as a currency. If you think about the float of currency that is necessary to run very large economies like China's, or an amalgam of 20 economies, there isn't enough gold to back that currency. So if they are going to have it as a common currency, a real currency, you're going to have a gold-denominated currency, not a gold-backed currency. If, rather, it is an exchange mechanism, an artificial exchange mechanism backed by gold, where countries have access to the pot in relation to the gold that they contributed. And if the BRICS is only meant to settle trade balances, then it's a viable option. And then you do begin to chip away at the exorbitant privilege, as it's called, that the U.S. enjoys by being the world's reserve currency and having the best counterfeit rights of any nation on the planet.
Gold prices reached close to $2,000 earlier this week, but declined due to concerns over an upcoming Federal Reserve interest rate hike. The Fed decided not to raise rates in June, as they seem to be managing inflation successfully based on positive job and inflation data. However, analysts believe the Fed will most likely increase the policy rate by 25 basis points to a range of 5.25% to 5.50% at the next FOMC meeting. Gold ended the week around $1,960. With the US dollar losing value against gold and the BRICS nations planning to create a new gold-backed currency, what does the future hold for the global financial system? That's all from us. If you like this video, please like, share and subscribe our channel and click the bell icon to be notified of future videos.